Cleveland, and welcome to your daily TA. Let's get into the charts. All right, so from yesterday, we were looking at this inverted head and shoulders, which is now invalidated. So we'll delete that. That was from a couple days ago, actually, not yesterday. We'll delete that, and we'll delete the target from that inverted head and shoulders. Yesterday, we were looking at this head and shoulders that had formed, and the target of that head and shoulders has been hit. The target was that 94 support level, and it not only has been hit, but has gone a little bit further down from there. It's still putting in technically a higher low from this, these wicks down here, if you want to include the wicks. So that would be a higher low there. I'm going to make this guy blue for chartins. There we go. Higher low there, as well as a higher low here on the RSI, which, bullish confluence. We'll delete that too. I don't know what that is. Bullish confluence there, somewhat. So we could still see this price action come down a little bit more and maybe not, break this local level of right around 92. Let's see it stay above 92. If the bully bulls can bounce from here, put in the higher low, or even come a little bit lower, not breaking this local support level that we've come across not once, but twice, kind of here with this wick as well, go down maybe even to 91. But we're looking for this local support to hold, and then to see a bounce. If then we bounce and we can see the bully bulls drive price action up over 96.8-ish, then we'll see, a higher high being printed. Preferably not even 96.8, but it's a little bit higher up here to like 97.7, we'll say. If we can get the bully bulls to push up to either 96.8 or preferably higher than 97.7, then we could see some more continuation upwards and hopefully some, pushes upwards and more higher highs, and to say, hey, we're continuing this bull run. Otherwise, if none of that can break, if we can't see that, that resistance here, this local resistance break, well, then expect further downside. How much further? Well, let's go back to the 6-hour chart. Let's get off the 90. We don't need you no more. Not right now, because we can see that upward or that higher low here on the 6-hour as well. And the confluence between that and RSI here on the 6-hour as well. However, we do still see this bear flag, which could play down as far as, 80,000. And we see this symmetrical triangle here, which usually they play down to the downside. So the move for that is down to about 85.8. So 85.8. That would be that level that we've been talking about for quite a while. Where'd the music go? Music, why'd you stop? Why'd you stop, music? We're going to go with this one. Music stopped for some reason. I don't know why. Anyway, we could see it come down to 85, which is that level that we've been talking about for weeks, being the beginning of this upward trending wedge here. And should we see it come down that low, that's okay. This bull flag would still be valid then. So let's take a look, see here at the daily, and I just want to show you real quick how we've been losing our support levels. So first one we lost was here, and then this one from yesterday is also now lost, so we'll make that one red as well. We're going to get rid of this target. We'll bring it back once actual bottom is found. So now we need to draw another support line. Let's see if this is the new bottom. If it is, then we're going to draw it from here to here, and we'll make that white or gray. And this bullish div, I'm going to get rid of that as well. It's still here, but if price action keeps going lower, it's going to disappear. The bearish div, that one seems to be playing out now. So I'm just going to get rid of the bullish div here on the chart just to clean up that chart a little bit. But yeah, see how these lines, these like red support lines are happening now? That's kind of reminiscent of these green support lines here, or resistance lines here, that we kept breaking through. So first we broke through this one, then we broke through that one. I changed it back to white for a reason in a previous video. Then this one, and this one, and this one. See how they kept getting broken? That was on a run up. So now we might be running down. How far down? Well, we're going to see 85 is like the must hold level for this bull flag to still kind of be, you know, happening. And if it happens from there, a run back up to test those all-time highs is pretty much where we're looking. How long is that going to take? Well, probably like the rest of the week, maybe 2, before we see any kind of real turnaround. I know, it's unfortunate. And I mean, it might not happen that way. Anything can happen in this you know, business, in this industry, in these markets. I mean, we're also seeing, you know, these 2 naked wicks. I talked about those like a week ago or something. So these 2 wicks here, this giant wick down and this giant wick down. This other chartist slash trader that I love, his name is Piano Matty B. So he would say that these naked wicks need to get candlesticked. Now, as we're seeing right here, that is basically these wicks both getting candlesticked. Now, if the bulls are going to take control, this is where they need to take control from, and let's see some upwards momentum. If not, then expect that further downside as far as 85-ish, maybe a little higher, 85.4. Maybe that move that we measured on the 6-hour chart of 85.8. All right. I mean, that's what we're looking at right now. I hate to be bearish, but you got to be bearish when the charts are bearish. All right. I want to show you one more thing real quick. This is a chart that I drew back in September. Well, I did it a little bit before September, but I posted it back on September 21st. What I did here was I took the ratio between the bottom, the increase, the gains, and the gains here between the bottom and the all-time high, the following all-time high, and then the halving and the all-time high. And I looked at the ratio between those gains as well as the time between them, and then I compared that ratio to the ratio between the the bottom here in the bottom here in 2018 to the top here in 2021 versus, so that ratio both between the time frame, like how long it took to get from bottom to top, as well as halving to top, and how much the gains were. So I looked at the ratio between these two and the ratio between these two, compared the differences between those ratios to give me what the next difference in ratio would be, then applied that difference in ratio to these bottoms and tops to get these numbers. I know that's a little bit math heavy and I didn't even really explain it super well, but I came to these numbers. If you look at it from the bottom, about 550 days from the bottom for the gains, I basically got 434% gain from the last bottom. The last bottom was at around 15.8, 5.34 times 15.8. It gave us 84K. We're above 84K already. So we're in the range between 84K and from the halvings, 153K. So that's my range for what I think the top will be. We're already in that range. When did the days come to? The increasing days between bottoms led to about 1,400 days is my estimate for the next one, which would lead to October 2026. That seems a little bit far off. And for the this is weird. I wrote that wrong. Oh, no, never mind. Yeah, and so about 550 days from the halving, if you look at these ratios and how those changed, and yeah. So 550 days would be about October of 2025. So that's the range for when the high will be. That's the range for how high it'll be. Now, perhaps we're going to see a little come down and then come up to there, or perhaps we'll just sideways motion here. Perhaps I'm completely wrong, and other people who have been in the market longer than me and are way smarter than me are correct, and we're going to go way higher than 153. Maybe some people who are saying, you know, we're going way lower down to like 77, and that's totally possible if 85 doesn't hold. But we can get to that later. There's a gap in the VRVP, but I'll teach you about that later when we get to it. But yeah, if 85 breaks, 77 is totally on the table too. Not to scare you. But there are still signs that say that the bull run isn't over. So this isn't like a bear market scenario. This is just a pullback. This is a very volatile market. And if you don't have diamond hands, you're going to get wrecked. Because you're going to get scared. You're going to sell all your coins. And then you're going to get wrecked. Because you're going to want to buy back in when it shoots back up. And then you're going to buy back in at the top again. And then it's going to shoot back down, and then it will be in a bear market. And then you will either hold through it, like so many of us have, and wait 4 years for your coins to come back up, or you let us hands your way out of it. And then you get left with, well, whatever is left in your portfolio. Anyway, thanks for watching. Much love. See you later.